Imagine waking up and discovering that one of the biggest sources of investment in the US economy just hit the brakes hard. That's exactly what happened when China, in a stunning and abrupt move, froze all investments into the United States. There was no build-up, no leaks, no hints, just a sudden directive from China's State Administration of Foreign Exchange. The reason? Rising political risks and a pressing need to protect national assets. But this wasn't just a quiet financial decision. It was a seismic shock that rattled Wall Street. To truly understand the scale of what just happened, let's take a look at the numbers. And trust me, they are more dramatic than you might expect. Back in 2018, Chinese investments in the US totaled a whopping $46 billion. Fast forward to 2025, and that number has nosedived to just $2.3 billion. That's a jaw-dropping 95% drop, nearly wiping out 2 decades of financial ties in one swift motion. For American companies, especially in tech and commercial real estate, this isn't just a drop in fundings. It's like running a marathon and having your oxygen supply cut off mid-race. And it's not just investors who are reacting. US stocks are in freefall. The Dow Jones has plunged 1,000 points in a second straight day of declines, on top of an earlier 1,700 point drop. The original shock came from President Trump's aggressive tariff policies, which rattled markets. But China's retaliation, that's poured gasoline on the fire. Before we go deeper, if you find this breakdown helpful and want more content like this, don't forget to like and share this video. It helps the channel reach more people who care about understanding what's really going on. So why did China do this? In response to Trump's 25% tariff on $200 billion worth of Chinese goods, Beijing fired back with a 34% tariff on $143 billion in US products. American farmers are now watching their exports disappear, and manufacturers who depend on global trade are sweating bullets. The US International Trade Commission estimates that these tariffs could shave 0.5% of GDP and threaten up to 500,000 jobs. This isn't just a tit-for-tat trade war. It's a chain reaction with global implications. And America isn't fighting this battle alone. Across the Atlantic, the European Union is gearing up for its own confrontation with the US. Trump's tariffs have driven up the cost of European imports, promoting EU leaders to talk about retaliatory tariffs on American goods, particularly in tech and agriculture. Countries like France, Germany, and the UK are starting to look to China as a more stable trade partner. That's a big shift. If Europe leans closer to China, the US could lose major economic allies. And who ends up paying for all this? It's not just businesses, it's you. At first glance, taxing foreign goods might sound like a smart way to raise revenue, but in reality, those costs get passed down to American consumers. You'll see it in your grocery bills, your electronics, and pretty much anything with a supply chain that crosses a border. Higher prices mean lower spending, and that puts more pressure on a slowing economy. Inflation is already creeping in, and people are starting to feel the pinch. Investors are nervous, business owners are scaling back, consumers are pulling back, and the road ahead, it's straight to look foggy. Now I want to hear from you. Do you think these tariffs are helping or hurting the US economy? Drop your thoughts in the comments below. I read every single one, and your take might just be featured in our next video. Trump has always marketed himself as a master negotiator. But even some of his biggest supporters are beginning to question whether his hardline tactics are actually working. Unemployment claims have jumped to 242,000, far beyond what analysts had predicted. From Silicon Valley to Wall Street, companies are laying off workers. Manufacturing, once a key part of Trump's America First vision, is now slowing down. And the president's approval rating, it's taking a hit. Consumer confidence is in freefall. When people stop spending, businesses start cutting. This leads to more layoffs and, you guessed it, even less spending. It's a vicious cycle. Meanwhile, the US housing market is cracking under pressure. Home sales are at historic lows, mortgage rates are sky high, making it almost impossible for the average family to buy a home. And that's pushing more people into rentals, which are getting more expensive by the day. For many in the middle class, the American dream is slipping further out of reach. The trade war is also shaking up alliances. Japan, one of America's oldest allies, just sold off a massive chunk of US Treasury bonds. Why? Retaliation. Japan's electric vehicle industry is being squeezed by American tariffs, and Tokyo's answer was to hit back where it hurts: America's debt. Canada, too, isn't just sitting quietly. It's launched its own countermeasures, canceling US travel and boycotting American goods. Even the friendliest of allies are taking steps to distance themselves. And it's not just international pressure building. Inside the US, Trump is facing heat from all sides. The real estate market has slumped. Businesses are closing up shop. Even late-night TVs are taking shots. Robert De Niro called Trump stupid, while Wanda Sykes questioned how someone so unfit ended up leading the world's largest economy. Behind the jokes is real concern about leadership, about the economy, and about what comes next. So here is the big picture. American jobs are at risk. Global alliances are shifting, and the economy is inching closer to a full-blown crisis. Trump's image as a trade warrior might play well in sound bites, but the actual results, they are raising more questions than answers. There is an urgent need for smarter, more strategic policies. America can't afford to isolate itself economically, especially not at a time when other countries are forming new partnerships and leaving the US behind. Every trade deal, every tariff, every investment freeze has ripple effects. Whether it's your job, your rent, your 401k, or the cost of your groceries, these decisions touch your daily life in more ways than you might think. That's why staying informed matters more than ever, because at the end of the day, the direction of US trade policy and the economy will be shaped by voters, consumers, and everyday people who decide what kind of leadership they want. There is still a chance to turn things around, but it's going to take more than slogans and tariffs. The US needs balance, protection where necessary, but cooperation where possible. Only then can the country steer back toward stability and long-term growth. China's sudden investment freeze wasn't just an economic decision, it was a loud, clear message. One that has triggered storms of political, financial, and social consequences. The Trump administration is now standing at a crossroads, facing a decision that could define America's role in the global economy for years to come. Whether the US doubles down or changes course is anyone's guess, but one thing is certain. The road ahead will require better leadership, smarter strategies, and a willingness to work with, not against, the rest of the world. If you made it this far, thank you for watching. If you found this video insightful, please like, subscribe, and don't forget to ring the notification bell so you don't miss our next deep dive. Your support helps us bring more stories like this to life.